Well, we all expected a big move, and we certainly got it. Nvidia stock went ballistic after hours and helped to bring the market with it. Hello, ladies and gentlemen, and welcome back to the channel where we discuss stocks, commodities, and cryptos. After putting in one of the best days in the last 2 months, where do we find ourselves? Well, it turns out that what was once a dynamic support may become a dynamic resistance, and we'll need to be watching over the next 24 hours. We'll also be talking about yields and the fact that they've started to move potentially down. And of course, then comes the big stock, Nvidia. What's it doing to the markets, and where can we expect the move to go from now? Is it further rallying, or is there something still a little bit sneaky about this stock? Well, welcome back everybody to the Daily Show where we talk about markets around the world. We'll be talking macro indicators and of course the hottest charts coming up. But let's get into the biggest discussion points, which were of course semiconductors and big tech. Those were the markets that were running the entire rally, and it kind of continues to be a bit of a problem in some ways. We're still seeing mostly the tail of big tech coming forward and not necessarily the rest of the market coming along for the ride. But what was really surprising was that Nvidia actually beat its own expectations. Look at this price to sales ratio. Nvidia was coming in for a 43.7, and I wouldn't have blamed anybody to think maybe they won't be able to meet this target. Microsoft's usually, and Apple and Alphabet, you can see their numbers. Look at where Nvidia was. But when you see this chart, you'll say, wow, it was pretty impressive. Yes, data center revenue increased a astronomical amount. It was up 171% year on year. And it probably marks an incredibly important point for markets. This is the sign of potentially a new decade of investing across the board. Maybe Apple and others will not be the king. Maybe now it's going to be Nvidia. Could this be the next $3 trillion company? People are talking about it already. But there are some signs that things are starting to slow inside of the economy. While tech is going well, anything to do with AI is going well. We saw PMI coming out for both the Eurozone and the UK, and things were not looking so good. Look at this chart here. On the decline, things starting to weaken across the board. And you could say this is high interest rates starting to take their effect. Well, it does seem that way. We also don't have any turns on one of our favorites, which is the bullish percent index yet. The markets are still running a little bit negative here. So is this what we call a dead count bounce rally? Is this something we can really trust? It did hit one of our key levels. It hit a massive zone we'll look at on the indices later on, but there are still some concerns. For investors, they're still looking at it and scratching their heads saying, well, the market may not have just gotten cheap enough for me to invest. Luckily, September also turns out to be a pretty bad month. Do we see October, November, and December rallying though? Well, it seems like it probably will based on previous years. But this is what's happening here with when you're running a really hot US economy in terms of the government side, and the Fed is trying to tighten on the other side. They call it Bidenomics. There are some problems definitely with that. ERP here is an interesting chart. This is basically where a big fund manager will say, well, is it worth us risking our money in things like equities? And at the moment, ERP is running at its lowest point since 2004. Can it get worse? Absolutely. We could go all the way back to the 1990s where stocks didn't make any sense and it was better to sit in bonds from a risk premium standpoint. But that doesn't mean that we shouldn't be paying attention to it. Remember, on average, we want to buy between 15 and 16x PE, forward PE, when it comes to investing in the markets. So where are we right now? This was the start of the week, so we basically find ourselves around here, and we have rebounded a little bit more. I'll update this chart in the next 24 hours so we can see it all. But in normal pre-election years, based on the last 7, we've seen a double dip that's happened in September. So it may not be over for the bears just yet. We also know that volatility in most years actually keeps spiking through to October. In pre-election years, it usually remains elevated over the next month as well. And this brings us to whether you bought this dip and you're in the market, should you be concerned about any further pullbacks? Well, historically, no. When you're running these huge, hot economics with massive deficits, and at the same time, yes, the Fed's combating that, we do have a kind of confused economy, and we know that when we have plus 10% from January to July, we tend to have positive year-end results, even though we're getting selling in August and September. For your first time here, we do talk about that chart quite a lot. It is quite important. What about large transactions? Let's go over to the dark pool transactions and the unusual activity we saw over the last 24 hours. First up, I'd like to make a special mention to people in the private community. There was a mention of Vail over the last 24 hours. It was an excellent island reversal down near the lows, and that had a nice little pickup on it as well. It wasn't maybe as nice as Nvidia's overall percentage return, but it certainly was a great move. And it's just those little things outside the box. When you start to recognize them, it can help you. And there was some nice activity down there in iron ore stocks across the board. Let's move over here to the Qs though. Dark pool transactions previously, dark pool transactions coming through now. Are these buys or are they sells? I'd like to clear this zone before we make a decision on whether this is just a pickup by the markets. But they were large trades, number 35 and 39 over the last 2 years. Basically some huge trades coming through. We also seen gold have a bit of a relief rally. This is the S&P SPDR Gold Shares Trust GLD, and it's gone back above that previous huge dark pool transaction. Remember, when a big transaction comes in, they don't really have stop losses. They're kind of just looking at increasing or decreasing their position. With a move such as this, could gold's bottom be in for the stocks anyway? It seems that that could be actually quite possible and something we'll be looking at. iShares Gold Trust also got a large transaction over the last 24 hours. And again, I would have to think that these are most likely accumulation positions as we've seen yields start to decrease over that same period of time. And remember, if the US 10, 20, and 30-year yields all start declining, we are most likely seeing gold flipping and starting to turn towards the bull side. Let's move over to expected options moves for this earnings week, and Nvidia came in right on target. At one point, I think it was up plus around 10%, ended up about plus 6.9 or something like that after hours. And yeah, it just shows you why it's so important to be able to look at the expected options move. The markets aren't that wrong, and often they will get it right. And they seem to get it correct with the plus minus for Nvidia. Let's move to options activity, and I think there's no doubt that we always expected Nvidia to show a massive amount of options activity. For another day straight, J&J gets huge options activity, 10.55. That's huge. But yeah, it was really just the day of Nvidia. I think this pushed sentiment so hard, and it really made it so that markets were prepared to move all the way back up to those 20 moving average levels. We also saw some interesting moves on iShares Silver Trust, which is the first time it's come in for a long time. And I think there were some other interesting points on things such as some hyper stocks. So do remember the read for yesterday was 50% puts, 50% calls on slightly less volume than average, 37 million versus basically 40. Let's go to rotation. What was the best of the major sectors? Well, gold did the best. Semiconductors did the second best. Obviously, after hours, semiconductors did the best. And then technology was the next one. Defensives were not doing well. Staples, utilities, and healthcare were all really showing relative declines. And what we tend to see around this time of year is a lot of chopping up and down of markets. So we tend to see markets kind of find extreme rallies and then they find sell-offs. Do remember that it is incredibly usual that if you're a bear in markets, you have to expect a rally to be brutal and last for around 3 to 4 days. We'll look at that later on in today's video to see how many days we're in so far, but that is something we do expect. If we take a look at the 5-day average, semiconductors are doing the best. Gold's actually had a nice little recovery after being a pretty weak sector, and technology up 2.8. Again, defensives not showing us that they're leading at this stage. If we do get a sell, we want to see movements going into defensives, and of course, technology, semiconductors, etc., getting sold off. Let's jump into the charts together now. US 10, US 20, and US 30-year yields were all declining on the session, helping gold go a little bit more bullish and obviously saying, well, maybe the top is in. And this is what is also usually kind of around the point where we have that kind of, not so much black swan event, but we do have some unusually bad news event that comes out. Remember, when the US 10, 20, and 30 have historically got back to this point, something has broken a few weeks to a month later in the economic system. We do kind of expect that to be something that's in the news over the next month. We also know that treasuries are going to like those yields going down. So what happened? Well, they had a good day, 2.5% for treasuries, back to the 20 moving average. And that's what we're going to really see a lot of today. Back to the 20 moving average, back to the little normal reversion that tends to happen. Will we see selling? If the sellers are going to come in, this is the next level. We broke the first level. We absolutely went ballistic on markets around the world. And then we've hit the second level in less than 24 hours. So we'll talk about that later on. JP10Y, what's going on here? Well, it's still something we want to set alerts for. Above 0.7, above 0.8, make sure you've got them, make sure you track them. The skew continues to go down, which shows us that maybe bears are still in control here in this market. And the more this declines as we rally off, do remember it's more than likely it is a false rally. That's something that we do look at, and we're of course considering it when it comes to the skew. We do look at copper as well. As we mentioned before, Vale and other iron ore companies were doing well. Basically, metals have seen an increase. Is this some type of pre-stimulus coming through where the markets are betting on China, the markets are betting on other things? Because we've basically seen copper get sold off aggressively and then have nice rallies. Again, where is it? Daily 20 moving average. Again, we'll see this is across the board in most. The US dollar definitely put in a big rejection though. The US dollar came up close to that 104, which was our final target here. And then it sold off, creating what we call a shooting star or pin bar candle. Now, I want to put it on the daily, but let's go to the 2 hour to look at the structure of this market. So on the structural setup, it actually has just done a little change of trend. Effectively, a pullback now should be met by sell demand. However, we did see one of these also in the S&P 500 that looked really good yesterday, and Nvidia absolutely destroyed that trade. Again, it's all about taking the reps. I do say this to private members. I say this a lot. Until you've taken 40 of the same replication trade, you don't really know your stats. Until you know your stats, you won't know how to take these positions and make sure you keep it more consistent. So here we have a potential turn for scalpers. They're going to look back in at around 103, kind of 60, and see whether a rally to that point is going to turn around. For anyone that's looking at more of a swing trade, you still need that 102 kind of 90 zone to be broken below. So dollar starting to show first signs of weakness here in the market. Now, because dollar was weak, gold was strong. Where did gold get back to? Yeah, you know it, 20 moving average. It's happening across almost all these markets. And we broke that descending channel the other day. And then, of course, we've seen that just strengthen in here. I did expect it to go back to 1912. It's at 1917 at this stage. This level makes perfect sense for it to get back to. If we go to something like a 2 hour, you can see here on the charts as well that it basically marks out previous support or demand zone and where it broke through. So if it's going to find weakness, gold's probably going to do it around this zone, something to watch. As we mentioned before, GLD, GDX, Barrick, all of these stocks, all improving, all coming back after a brutal sell-off. Where are they going back to? Yep, the 20 moving average. So again, another one, support, huge little build, the build sold off, and we're back to this level. Now, if it smashes this level, you're going to be looking for pullbacks and longs. I would certainly say that's a huge turn in markets. I'm very excited for gold. We'll be watching it over the next week coming, and specifically over the next couple of trading days. US oil, now this one did break down. This actually showed weakness over the previous session and actually broke below our key level here. Now, because it broke below, we have to believe that now rallies are going to be met by sell demand. Notice what happened here. We had a 20 moving average, price broke below it, price came back up, it retested that 20. We can see here the shooting star or the pin bar that came through, and it's sold off since that point. Rallies to be met by sells, at least the way we're looking at energy at this point. Something very interesting on this chart, and it looks like it's done a swing turn. So basically, this is where we're getting a market that is now looking towards further weakness and maybe more of a sustained trend towards the downside. Tesla, let's go over to single stocks before we do indices together now. And Tesla was, I would say, lackluster. I mean, yes, it was up 1.57, but it continues to hold that strong resistance, which was the previous support. Previous support broke below, came back and retested, and anywhere in here is certainly where we could see sellers. And if we go back over to the daily here for a second, you'll notice that just above there is a 20 moving average. So if Tesla has a little rally, I'd expect sellers to be in between this zone here, just like they were the other day. I still think that's where the sellers are. We breach above that, well, we can talk about it and we'll certainly be looking a lot more positive. Let's go to Arcade. Now, I want to talk about hypergrowth stocks because they've been brutalized. And for people that are investing in this market, they might be looking at this and saying, damn, that's 23% down, back down to prices that we could have gotten in May of 22, November, February. You know, this is not too bad. And this happened across so many hypergrowth stocks. Now, it came back to a most traded level. It came back to a trend line. Hypergrowth's really sold off very aggressively to find good levels. And it's not just this one. We saw it on all of the stocks across the board. If we look at SoFi, if we look at something like Trade Desk, any of these other types of hypergrowth stocks from the past, they usually have been showing that. Interesting point. Certainly the beginnings of a potential rally here for those, and we'll be watching it closely. Let's move over to AAPL. Now, I would have thought that we probably would stop somewhere in this range here. So AAPL kind of needs to sell right around this point. But again, what's just behind it? 20-day moving average. So it's a nice little rally, potentially a little sell. Depending on how much more Apple rallies, it could mean that when we get a pullback, we need to be looking for buys. So I think that Apple is right on the cusp of where the bears need to take attention to it. What about semiconductors and Nvidia? We'll do semiconductors first. So semis did well. They came back to the 20 moving average, but of course it's not the same across all semis. It's just really Nvidia ruling everything, and the rest of the semis are just sitting on that 20 moving average. Expect this to jump above during the start of the session. And what I would think right now is this actually has done a little change of trend. So it's possible that pullbacks during this will be met by bull demand. I have said many times on this channel that I think that 132, 130 is possible for semis. And all we need to do is break that level. If that breaks and closes, put an alert underneath 143, that should line up with an equilibrium move that goes towards 130 for semis. But Nvidia was the talk of the town. This stock went ballistic. And I just want to point out something that's happened before with this. So first up, we went to almost $520 a stock. So $520 a share. Then we've rejected off that. I think we ended just above $500 in the pre or the post market. Now, if we go over to previous toppings of markets, it's not unusual for earnings to push through a huge number. It's really what happens after that. Now, it tends to be that September is quite weak for semiconductors. We're almost in that period. We do need to be careful here with Nvidia. Is it a great stock? Absolutely. Has it blown out all the numbers? Absolutely. If I was an investor, would I be worried about it? Probably not. Why would you? It did everything that you could even hope for and more. So realistically, it hasn't turned trend. But from a technical analysis perspective, 520 is just a guess. But if it does take underneath 400, as we've mentioned before, and that's very possible, then we'll be looking at a further decline. Remember, the thing with Nvidia is if it does go bad, it goes really bad. And I think it just wanted to keep that in mind. If things turn like they have turned before, that's one turn, but it's not the only one. If you've been trading for a while, you would know that other earnings seasons have pushed markets up and then they've declined drastically after that. At this stage, I would say it looks really good. The price action is still bullish. It did put in a 16%, which usually tells me that over the next 3 to 6 months, I don't expect as much from the stock anymore. But hey, that was a pretty impressive result. So I'm happy to be wrong there if necessary. At this stage, I'm paying a lot of attention to it. If we go to AVGO, which is of course Broadcom, that put in a pretty good session. But I still think that Broadcom and others are still looking at weakness over the next 3 months. Okay, so I am paying attention a lot to the broader semiconductors. I'm not going to try to short Nvidia. I think that would be the bad one to short. And really, shorting the best market sector is always very, very tough if you're even trying to do that. Let's move over to China now. Any movement there? The answer is not really, but we do find ourselves on these lows. Again, as an investor, you might say, well, this looks like an inverse head and shoulders. Yes, it does. Is everything coming out bad news from China? Yes, it is. So it could be that maybe there's a little bit more excitement there than you think. The Australian market looks a lot better with that big closure here. But as you can see, a lot of structural build there. We've got problems at 7250 with multiple ribbons between moving averages and also a Fibonacci pullback that'll be sitting there. So 7250, a point to watch. It does look kind of bullish on these timeframes, thanks to things like commodities improving, such as iron ore, which is a huge part of Australia. And that's a decent little closeout. But again, will be driven, I think, more by the US. Let's move over to the German market. Here we have a market that still is finding that rally. And I've actually done some work here on a number, and I think this number is incredible. 15,000, basically 890. That's going to be a really interesting zone should we rally up over the next 24 hours into this point. I do expect sellers to be sitting around that area, and certainly it'll be one I'm watching on the small time frames. Scalpers, day traders, etc. might be interested in that zone. Make your own decisions as you need to. Now, this chart almost looks the same as the ASX 200, the Aussie market. We've got a closure above these wick highs. So that's interesting. That actually shows that maybe we're seeing a little bit of strength. If we go over to the ETF, which is IWM, you can see here that it's really more on that market, just kind of could be a flag, could be just consolidation. It's really tough to guess what exactly is going on the Russell. So I do think that's a little bit tougher. If we go to the Qs though, it becomes more clear. That is a 20 moving average. We know the 20 moving average was respected heavily on the way up. We know it was respected after it closed below. We know it's dynamic resistance at this point. So we know what we're looking at. And it just so happens to be exactly where we've seen huge amounts of trades before. Remember, this level was where we were basically shorting it previously. So you can see here that it's such an important level here for the futures market as well. We're right at those tops. We took out this high and we moved instantly into this level. So that was very, very quick move. I mean, unless you were trading it during the day and you were saying, yes, we took the high, let's go, baby, and we were moving it up higher, it would have been maybe a little tough to get into. But yes, it was a great momentum shift. And we do usually expect, remember we talked about that idea of having 1, 2, 3, 4 kind of up days in bear market or bear moves. There's 1, there's 2, there's a gap that obviously was still up pretty much because it gapped up. And there was the 4. So we've had 4. If selling's going to come in, it usually would happen as of the next session, so the Thursday session. Let's move over to the S&P 500, same thing. A little bit behind the 20 moving average here, allowing potentially further rallying to go if needed. And you can see that we came down to our first take profit target where we thought the bulls would come in. At this stage for bears, all you really want is you want below 43.30. If you get that, you get a close. Well, you can celebrate on 4,200, probably move to 41.50 and further selling. But for bulls, you're going to be looking at this and saying, this is exactly what I wanted. A nice little pullback. I've bought the dip. Hopefully, I've looked at those types of things and I'm feeling a bit excited about it. If you've missed out so far, do we need to be concerned? Well, I think there are some things here that we need to watch in markets. First up, the market's coming back into that huge trade zone. This was a zone that was hugely traded before. And in fact, if I get something like a fixed range volume profile on this and pull it down to these lows, you're going to see there's a lot of trade in this area. And the histogram showing us that this is where all the trade was. I mean, no surprises. That's where the structure is. So between here and here is where you expect those sellers to potentially be after we looked at the next point or the point that we had previously. Now, first up, we did think that this would act a little bit better. So we saw the initial, which was here. Then it did a little turn. Then it gave a really good entry pre-market yesterday. And then it came down. Now, this would have been tough touch and go whether you broke even the trade there. But it was a really nice short zone. Remember I talked about the reps before? That's the type of trade I would usually take. I would be pretty happy with that trade based on everything we were doing. And of course, has it failed? Yes, technically. Unless you broke even it, you would have lost on that trade. But I think the important thing to note here is it's just like anything. Markets are just about putting in the reps, putting in the stats, and recognizing the next areas. The trend has obliterated this zone. You can see there was some action to it, but after it took this high, yeah, it was going to always move to the next level. Now we're in this next level range. So if we see another turn, well, maybe you have to pay attention to that. Bulls will be looking for this level to be taken out, specifically 4,500. And then looking for pullbacks after that point to get their purchases in and basically look for the buy side. 4 days up, that's expected. Now we expect the bears to take control if they're going to. Let's move over to Bitcoin. What's happening here? Again, base formation, very interesting point. We have a decent amount of demand that's gone through the base formation. However, it is still, I think, a little bit of a shaky zone. We didn't get a new low, which is a little disappointing if you were trying to really predict that this is a base that's going up higher. We're still sitting at the same area. Bitcoin, it's going to move with markets, but at the same time, if markets start selling over the next couple of days, don't expect Bitcoin to exactly rally up hugely. Still stuck below the previous resistance of 27,000. So yeah, interesting zone for Bitcoin. We'll come back and we'll do our special on it, as we mentioned, very, very soon for this. I know a lot of people have been messaging me. Don't worry, I've got you guys. I just need to make sure I put everything together. Let's also discuss news ahead. Now, what other news do we have? Well, we saw those PMIs. They were weak. We also saw, of course, the big Nvidia result. That was really strong. And now we go to revised UOM consumer sentiment, which is on Friday, by the way. Unemployment claims Thursday, 8:30 a.m. Don't think it'll move markets too much. Then we get Friday, August the 25th, and we have revised UOM and the Jackson Hole Symposium with our good friend Papa Powell coming out to speak at 10:05 a.m. New York. So what will he do to markets? He's probably the next big bit of news. But at this stage, it was 4 up, 20 moving averages on the Qs, on many stocks. And of course, if the bears are going to come back in, I'll expect some kind of maybe market structure to form here on the small time frames. Thanks so much for watching. If you enjoyed today's video, make sure to subscribe, smash that like button, guys. We'll see you in the next one. Bye for now.